Howdy, Tony. Howdy, Lisa. How's it going? All right. Hello, everyone, and welcome to the Ask Me Anything with GC Ventures. Really excited to have everyone join and really excited that Lisa and Tony agreed to join. So really excited about this event overall. Just a quick word about Deep Tech Showcase before we start. Deep Tech Showcase is a department within a larger company called Eagle Point Funding. Eagle Point Funding is a grant writing consultancy focused on U.S. federal grants, mostly from various government agencies, a lot of DoD. And Deep Tech Showcase is one of the departments that does a lot of business development. As part of the business development, we run an ecosystem with investors, government, as well as corporations. And GC Ventures is a mixture of an investor and corporation. And I think we're going to get into that a little bit later on this call. And we're really excited to everyone join. And if you have any questions, feel free to put the questions in the Q&A. It should be in your meeting toolbar, and we'll try to get to them. Yeah, it's the little question mark inside of a chat box. So we'll try to get to them as we can. And if you think of something, feel free to put it in, and we'll try to get to it. We're going to get started with a few questions that we have for Tony, and then we'll segue into the questions from the audience. So really excited to have you, Tony. And the first question we have is going to be a good introductory question. It's just tell us a bit about yourself, your background and current role, so we can get a better understanding.
Sure. Yeah. Thanks, Asher, for having us, and really appreciate the opportunity to share a little bit more about self and answer any question that anyone from this call may have. Maybe just to provide some talk context, is it okay for me to share my screen a little bit? And I
Absolutely.
do
Yeah.
have
Let me allow. It's allowed.
Okay.
Perfect.
All right. Let me just give me a sec. So can people share see my screen?
It's starting. Yep. Now we can.
Okay, sounds good. I'll probably just quickly one through some of the standard stuff of ourselves, and then a little bit about myself. So
Sure.
again, GC Ventures, we are basically the corporate venture arm of a chemical company out of Thailand. So the company is called PTT Global Chemical. And we, as I mentioned over here, we invest in opportunities that can fit with the mega trends of the world that have big implications to the chemical industry. And just put into context, so GC is the flagship downstream petrochemical arm of the national energy conglomerate out of Thailand. So as I'm showing over here, the ultimate parent company is called PTT Group, which spans across the supply chain of the energy, so with upstream, downstream, midstream, as well as the utility side. And more with that in mind, a little bit about ourselves. Basically, we are a big petrochemical company out of in Southeast Asia, and there's some numbers, statistics, and I think the one that we feel most proud of about is this number. So basically, we are included in the Dow Jones Sustainability Indices for the past many years, and actually over the last 5 years, we are ranked as #1 in the chemical sector 5 years in a row. So we take really pride about this, and hopefully we can keep up with the expectation from investors globally. And now transition more to the corporate venture team. So we basically invest in early stage opportunities, and that has strategic synergy with our operations. And advanced materials, circular economy, decarbonization, and the industrial digital are the four sectors that we keep a very close eye on. And here are some more detailed lists. How we do things is these are the areas that we always keep an eye on, and depends on we revisit the more detailed nuanced list maybe on an annual basis to see what makes more sense for us to from a sector diversification and allocation perspective. But we keep track of all those sectors. So again, going back to some of the others earlier slide, we do have a big footprint in Southeast Asia, but we think we can make big impact to the world by investing in emerging technologies and then bring them to that part of the world. So we are a very reputable partner to access the Southeast Asian market, where is one of the most dense region on the earth. There are 10, 11 countries in the Southeast Asian. In the Asian, now it's more 11, and the GDP growth, the government, as well as the overall economy is booming. And GC, yes, we are part of this big energy conglomerate, but we also have many other subsidiaries under us, as well as other sister companies in the supply chain beyond the traditional energy. So for some people who actually not familiar with, under the PTT umbrella, we actually have one of the biggest cafe chains over there. This is being viewed, Amazon Cafe is actually being viewed as the Starbucks of Thailand. So when you arrive in Thailand, you see Amazon Cafe everywhere. That's actually also under the PTT umbrella, which is a sister company of us. And again, for us, because we see much downstream, so we have a lot of material sectors that's under us. So these are like the broad network that we can bring in, and we hope that we can add value to the startups ecosystem. Oh, we're probably not as we're pretty selective as an investor, and as of today, we have about 10 startups portfolio in the U.S. market, and then we also serve as LP in multiple VC funds. And if you have any, again, I believe we will dive into many of those topics over the next hour. But yeah, so this is us on the as an organization, as a team, and feel free to reach out to us. I believe our contact info will be shared. So I'm gonna stop sharing and transition more to the personal side. So Tony-san, so I'm basically I'm a physicist by training and spent a few years in consulting firms doing tech scouting, open innovation, advising big corporations about their innovation strategy, investment strategies in certain material-related topics. And then when GC decided to build a small team in Boston back at the end of 2016, early 17. So I joined them. So been growing with the team over the last almost 9 years now. And currently, together with Lisa and my other colleague Jared, who is on this call, so the three of us are the permanent team member of the team. And we basically, roughly speaking, we spend maybe 50% of time on collaboration, new business development, as well as open innovation, and basically how we can bring emerging technology to the different logos that I show in my earlier slide. And then the other half of our time spent on investment activities. So we are very active early stage investors, both in startup and fund. So yeah, so I probably stop there.
Sure, absolutely. No, that was some good background. What much needed and good background. So, what are your thoughts on the current economic landscape as it relates to the deep tech startups? You know, the deep tech startups that you're seeing, especially.
Yeah, thanks for that. I think that's really a good question. I think I probably want to put into a few this aspect to it. So I'm assuming that you're referring more on the economy side, like investment environment. So
Hmm.
I would say if we look at early stage investment, I think there are a few factors that we're seeing, right? So number one is the overall VC market because of many of the uncertainties out there, and also because of the lack of exit in the last year and a half. I think people are typically quite conservative. And then with that in big mind, it will impact different companies and depends on which side you're sitting at the table. So I think for deep tech startups, more particularly, I think typically the development cycle are pretty long. And I'm seeing that startups are, whether it's my own portfolio or the companies we are aware of in the ecosystem, they have been proactively preparing for this, try to manage their cash properly. But also, I think all investors are both on the startup side as well. I think we are all, for the people in the ecosystem, we are all what people call cautious optimists, right? So this is where we are looking at things more from 5 to 10 year time frame. So whatever is happening now will likely impact our tactics, how we deal with things quarter by quarter, maybe for the next year or two. But we all think that the deep tech is the way to go, and that's a major thing that how we can actually make the world a better one.
Sure, that makes a lot of sense. And so, if you are a startup who is sitting on this call, what do you think they should be doing? What are some what would you advise a small business that's interested in engaging in GC ventures, or with GC or PTT as a whole? What makes the most sense for what steps should they be taking if they're interested in engaging with you further down the line?
Sure. I think the first step is really try to understand who they're talking to and also what's their mandate, right? So as I mentioned earlier, so for us, investment is half and the other half is collaboration. And even within the collaboration side, I think their early stage R&D type of innovation longer horizon collaboration. There are also near term, try to address business need today that we need something a little bit later stage. I think the first step my suggestion has always been just talk to investors like us and understand their mandate, and then to brainstorm with people like us what makes more sense. So it depends on the strategic synergy, depends on the stage, and see what vehicle makes more sense. I would say in our sector, because of the very long development cycle and scale-up cycle, uh, it's never too early or too late to talk to people around you, and at least register your name with them. And then you never know when the time will what's the good time to actually reconnect and have restart conversation.
Oh yeah, I definitely agree with you on that one. We've seen a lot of interesting updates just from, companies that didn't necessarily do business initially, but they get tracked. And then once they get tracked, things happen and things just occur on their own. Because, it makes sense later on to engage and they don't realize that a not now is actually a not now. It's not a no, it's a not now. So
Yeah.
it's very, yeah, it's definitely something that we've seen also. And that's good advice. How do you see GC Ventures or GC or PTT engaging with new tech in the future?
That's a good question. I think structurally, within GC, for example, we have like us, people like us who are managing emerging technology in this part of the world, but we also have other teams that has been dealing with different time horizons. I would say it's really case by case. So for example, and also depends on different business unit, depends on their mandate. I think I'm almost feels like repeating myself. It really depends on who they are talking to. So that depends on the vehicle. Like the early stage R&D, early stage investment versus business today. And then so that's kind of like how we charge things differently. So for example, for investment, the conversation has always been about both on strategic collaboration as well as financial terms. For early stage collaboration, at least for GC, our internal goal has always been how we can identify higher margin business that we want to enter into. And because we are in the business of making stuff and sell pallets, right? So what we most feel comfortable and we have expertise is manufacturing a chemical, a molecule, and then distribute it, sell it to the end customer. So that's kind of like if we can identify something higher margin that fits with the supply chain we're familiar with, so our R&D team will be very interested. As for the let's say the emerging technology for mature business who are looking at improve their P&L quarter by quarter, their preference has always been something that's validated out there. And typically they have a relatively high bar for any new capex investment. So this is where if there's a low capex requirement, pilot testing something where my business unit will be very happy to spend people and time of their labor to actually get things started and test and validate the thesis. And then if it's really making sense, and then move to the next stage. I think that's kind of slightly different, depends on who the unit where we're talking to. But generally, I think we are very open.
Sure, sure. And I'm going to ask this question because it relates to what we're doing at Eagle Point. So just to be clear, it's because we kind of a lot of the audience is probably somewhat interested in it. But what do you think of the way the U.S. government engages with startups? And do you think it's beneficial for the startups? Like, are some of the companies you invested in? I mean, I'm sure some of them have been, but federally funded.
Well, uh, totally, right?
Yeah,
So
yeah,
I think pretty much all my portfolio companies in the U.S. company, the U.S. portfolio
sure,
company in
sure.
this part of the world have benefited from various programs along the way. Whether they are, let's say, a seed stage company that we, let's say, we supported last year, or a Series B, C, D company we supported many years ago. I think the nature of that is, um, again, I think we already talked about this for a few times, is for deep tech technologies, the development cycle is typically pretty long, right? And then the time to market is long. And then on top of that, there's a lot of scalability challenges and market timing challenges that very different from, let's say, consumer facing things or software things. So this is where it's a lot because the return cycle or profile is slightly different from our, let's say, software peers. So this is where government funding is a critical tool and fundamentally important to this. So, I think many of our startups been, I would say, benefit from that. And again, we can always discuss what is the about specific agencies and the style, but overall, I think this is a great tool that for our portfolio companies to tap into, and we are very supportive and for them to move forward very actively, chase after those opportunities.
Sure, exactly. So I hear that you're saying that chasing after government opportunities makes a lot of sense. What are some other programs or accelerators that you would recommend to a deep tech startup?
Uh, there's so many of them. I think to start with, I think you guys did a
Yes.
great job. So I really think Deep Tech Showcase have been really helpful in putting together events and to connect us with startups. Thank you very much for your team's effort. And then I think within deep tech, there's a lot of subsectors, right? And also there's a lot of geographies where we have over the years seen many different programs or accelerators. I think all of them are really unique, and because they also want to be differentiated, I think they all have their own things. What I would say is, I think it's really about the fit, because certain accelerator not necessarily is a good one for the others, right? So with that in mind, so for example, like I'm currently calling from Boston. My team is based in Boston. This is our CVC team headquarter, and we operate in the chemical energy sector. So if we put those lens in, I would say, for example, in Massachusetts, there are programs like Mass Innovate, where they write a lot of grants to help companies regionally to grow. I think we are also reasonably familiar with some of the neighboring state. They have their own state level of funding or grants programs, and we advise our startups to apply for those grants. On the accelerator side, so because where we're sitting at, I think Greentown Labs is definitely one of the leaders in the space as well, who also have offices in Houston. And again, if we jump to Houston, there's a really booming ecosystem on the deep tech environment or ecosystem as well. So again, there's so many things that I can mention, but I think it's really about the fit rather than rather than Tony says what or deep tech shows. It's really it's never hurt. It doesn't hurt to reach out to those people, the accelerator as much as possible based on sector and geography and figure out who is the best fit.
Absolutely. And you just mentioned that some of your priorities are chemical, but to kind of sharpen that point, what are your tech priorities for funding in 2025 to 2026? Or what do you see on the short-term horizon in terms
Sure.
of tech priorities? Yeah.
I think for us, like I mentioned earlier, so we kind of like with that laundry list under the definition of what we really mean, and we kind of review that on a annually basis. Uh, for the near term, I think what we really take pride of are probably two sectors that we have always been feel strong and something that we can help startups. I think one sector is green chemistry. So we have subsidiaries, joint ventures, as well as CVC portfolio along bioplastic, biopolymer, bio-based, or biodegradable. So that's something that we are really strong about, and we always keep an eye on that space. One of our most recent transaction we did was early this year is a bio-based acrylic acid started out of Chicago area. And then the other sector is coating. So advanced coatings with very unique functions. One of our, not CVC portfolio, but the corporate portfolio, one of our biggest portfolio subsidiary, wholly owned subsidiary is a company called Onyx. It's a European headquartered global business, a multi-billion revenue every year. They are the biggest, one of the biggest resin supplier for the coat and painting industry that goes into so many different applications. So if there's innovations along those lines, that's also something that we chase after.
Sure. And then another thing, you mentioned Boston on a
Yeah,
previous question you answered. Is there a geographical focus or areas or trends that you've even been seeing that there are certain areas that are more active than others? Or are you guys kind of more agnostic in terms of where you see your investments come from mostly?
sure. I think as a team, as a function, you can probably see from my background, we actually have multiple teams globally as GC Ventures. Our function report to the CTO of the corporate who sits in Bangkok. I'm personally responsible for the North American region, but I have colleagues from Amsterdam covering European region, and I have my colleague based in Bangkok covering Asia. So again, so as at the team or CVC function level, we cover everything globally. And then this kind of goes back to some of the fundamental thesis that we are having is we take pride as an Asian country where we see a lot of growth. But however, compared with US and some of other more developed countries, we also realize that in the chemical material, even energy sector, this is where we see most of the innovation happens. This is where we see the highest density as well as quality. And for us, yes, we take pride, but still we want to acknowledge that we have a big market, but it will be maybe decades for us to really catch up in terms of innovation pace. So this is why we actually strategically prioritize for early stage investment, prioritize Europe as well as United States as a market to start with. Actually, those two markets is about almost 90% allocation of ours. And how we deal with that is basically we prioritize investment over here. We support local startups, help them to grow globally. And then when they reach to a stage when they are ready to expand into Asia, expand into Southeast Asia, we can be a fast follower and then help them to grow in that region. So that's kind of has been our philosophy.
Sure. That makes sense. That's a good philosophy. And then this is the last question I have, and then we'll move to the audience. So if anyone's still stewing over a question, feel free. I see there's a few questions in the Q&A, but we're going to move to that in about a minute and a half. But how does GC Ventures differ from other VCs or maybe even CVCs?
Great, great question. So first, I think there's, as you indicated, there's kind of two major camps, right? There's the VCs. Their mandate is basically deliver financial return for their LPs, right? So there's a very financial focus. And within the CVC camp, financial is definitely one of the key mandate, but also there's always some level of strategic synergy needs to be extracted. Depends on who you talk to, which function, how the balance between the financial as well as collaboration or strategic synergy, it may differ dramatically. So I think specific for us, I think this is kind of where I will say that we always want both, because another thesis that we have is based on our experience, typically the financially sound startups are also the ones that can generate higher margin, that can actually indicate where the market is going, and can also have more ways to actually work with a corporate like us. So this is where our philosophy has been, we want to chase after the financially very sound opportunities, but also we try to extract synergy out of the collaborations. So we would rather be selective, not doing any transaction, rather than chase after the ones that we don't feel comfortable or financially is not as sound as we hope to. And again, I think all different CVC teams have their own philosophies. I think for us, we've been in the game for a few years already. So we also have a lot of our own battle scars. So this is where at the team level, we try to keep the philosophy of, we try to be consistent, which has been a challenge for corporate because there's a lot of turnover between people to people, depends on who you talk to. So for us internally, whether you talk to Lisa, myself, my colleague Jared, so we hope we can deliver the same message. So that's the first thing, consistent. The second is transparency. I know it's tricky, but CVC for a lot of people is a black box. No, so this is why we need this session like this, right? Because no one really understand, okay, for example, hey, Tony, I sent you a deck, but what's after that, right? 3 months passed, no response. So again, I don't want to say this, but corporate has they're typically good at operation, but they're not really good at taking new information. So this is why people like us, we can be the translator, and also be I will say, the middleman, try to handle, help with communication. So we try to do our best, try to be as transparent as we can about our process, about where things are. And if it's not a good fit, again, in most cases, we'll just tell the innovators upfront that, hey, sorry, this is not a good fit for us, but we are definitely open to talk in 6 months or 1 year or 2 years from now when certain things happens. Again, hopefully we can meet our own goal regarding the transparency side. And then the third is financial discipline, because there have been many cases over the years we see that by ourselves as well as by peers, where sometimes we are driven by the shiny object out there and went too much into the hype cycle where people get burned. So this is where as a CVC team, purely on the investment side, we do very thorough due diligence. And again, I'm not sure about other folks, but in our internal due diligence evaluation, we talk about valuation a lot. We talk about the corporate governance a lot. We talk about exit scenario a lot. So that's kind of how we try to stick with our own philosophy of being consistent, transparent, and financial discipline.
Sure. That makes sense. So now we'll move to the questions. Lisa, if you would like, I think you can see them as well. I could also add Gerald to the panel if you'd like. But if you want to take down questions that aren't necessarily relevant, I'll ask the ones, as of now, I'll ask the ones that I think are relevant. But Leland Johnson asked, he'd love to know your thoughts on the shortage or non-shortage of graphite, natural and synthetic, that we're seeing for EV and BESS supply and demand, and 3D graphene as a replacement. So he wants to kind of hear your thoughts on that if you have a take on that.
Great. Wow. That's a tough question. I don't want to pretend to be energy storage or battery expert. But for most people on this call, I hope that you have some understanding of that. Again, please correct me, I'm wrong. My understanding is if we look at from global scale, graphite or synthetic graphite is not of shortage. The key challenge we're facing, especially in US today in US, is mainly because of the regulations that's set into place recently. So again, I think I have to admit, since last year, I'm a physicist by training. Over the years, I learned try to become an economist, try to be a transaction person. But more recently, I think I try to become a geopolitics as well. So try to understand how does the regulation change over the time. And so this is where, for me, I probably want to take just the long-term view. So whoever is asking this question, and also for people, so if you have a belief in energy storage as a whole, if you have a belief in battery-based energy storage solutions as a whole, there will be natural need for material like graphite. That for me, that's the level of questions that for as a long-term investor that we should be thinking about. And if you believe in that thesis, the next question you should ask yourself is, okay, how do I set up my supply chain? And where that should be strategically located to capture the value. I think that's the next layer. And then it's probably better for some real expert who understands space better to comment upon.
Sure. One person asked in the chat, how do we get access to the potential partners with GCC? Is it only through your office?
That's a good question. I think this is kind of where the clumsiness of being in a big conglomerate. I've been with this company 9 years. I still don't think I know everyone from everyone, even in the North American market. I have to admit. So roughly speaking, if we're talking about emerging technology in North America, feel free to use us as the initial team. So reach out to Lisa, myself, and Gerald. Feel free to reach out to us, and then we can decide who is the best person that we hand it over to. And that applies not even for within GC, even within the PTT umbrella is the same, because we have so many different functions, although we are legally separate entities. But for the emerging technology, as of today, we are the only function who have a permanent US team. So for example, if you already know people from PTT, feel free to go with them. But however, if you're interested in getting to know more about the PTT family, but don't know where to start, feel free to talk to us, and we can point you to the right people so they can talk. For example, the upstream folks, the infrastructure folks, the utility side, even the Amazon Cafe, the retail. So we have an internal network to help you to identify those.
Sure. And then Brad asked, what's your typical check size?
Good question.
Is that my Wi-Fi?
No.
No? Okay.
This is why I'm on the call
There you are.
as the backup. I can answer that question. Lisa Dufresne, GC Ventures, until Tony comes back. He'll come back.
Sure.
Our check sizes go up to 5 million. Oh, here it comes. Hey,
Sorry, glad that we have a plan B.
yeah, I never got to answer the question, so you go right ahead. I'll just put myself
Yeah, sorry
on.
about that, that technical difficulties. Yeah, so I think the question is about check size. So
Yep.
our single check up to 5 million. In the past, I think 2-3 million is probably more like initial check. But today, I think in this market, we're probably more looking at something like 500,000, 1 million range.
Okay. And then Dr. Zuti asked, how is a CVC different in VC in terms of prioritizing your return on investment through exits and such as IPO or M&A? Do those differences have an impact on risk appetite at the CVC level?
Sure, that's a really good question. I would think the most fundamental thing is for whatever the CVC team or VC team, financial is definitely one of the key goals, right? So whatever approach that can help the portfolio company to have a generate a higher return profile. I think that's definitely whether it's exit, shared near term or IPO. I think all of them are definitely on the table. And then that's kind of like, and then within the CVC folks. My understanding is that some of the CVC teams, they are structured in a way where their strategic intention is higher than the financial intention. In those situations, my understanding is they tend to have a slightly lower target in the actual financial return, but want to prioritize their strategic value. So whatever that may be, maybe identify a collaboration project or maybe even identify potential future acquisition target or joint venture development partners, whatever that be. So that's kind of where I'm seeing. And when we convert that into the exit scenario, I will say, unless the strategic intention is to acquire a portfolio company, I think whatever sells the company at the highest value, that would be the preferred approach.
Sure. That makes sense. Eric asks, do you invest in graphene startups? I see a lot of people are interested in graphene today.
The way I say this is it's all in this space is there's always certain rules and there's outliers all the time. So it's always yes and no. So for example, again, regarding graphene, right? So for us, we do not invest in the startup just because they are working on certain technology. We invest in something because it needs to have a good product that's the market need, and we understand the market well, and there's a higher margin business, and there's a team, around it that is really super strong. So we definitely want to look at, for something that we are interested in, for graphene, I would say yes. But then where's the graphene is generated? What's the application? So those are the more nuanced questions that we want to ask to evaluate whether this is something even of interest to us. But on a high level, we are in the business of doing carbon, right? So, and if there's a high value product that can convert into something that we use in our supply chain, we have a way to work with them. Yes, we're more than happy to evaluate.
Sure. And so it looks like the next few questions are going to be industry relevant. So the next question is, are you looking to invest in the semiconductor space? And what is the minimum TRL that you require?
Good question. I think for the TRL, I think that's probably easier to answer. The way that how I would say is, we would be interested in anything, as long as they let us, as long as our check can afford, right? So the reason why we have this evolution of, we used to be 2-3 million check size, now it's more like 500,000, 1 million, is mainly because the market today is very different from market a few years ago, right? A few years ago, with 2 million, 3 million, I can still get into Series C round, Series D round. But today, with that same check, probably A or B, right? So that's why I would say, for us, one of the most recent transactions we led a pre-seed round last year, and the transaction I mentioned earlier today about that bio-based acrylic acid, we're also leading their seed round. So again, I will say, I'm not really a big fan of use TRL as a way to quantify where things are. So I would say, as long as we do not really want to take the science risk, but we're happy to take the engineering risk and the market risk, and then price it properly to see how much we can contribute.
Sure. And then Scott asked, for your early portfolio companies with a global product potential, do you encourage them to file global patents?
This is a very generic question. I think it's probably better to consult with your legal counsel, specific IP.
That's fair.
Right. I think again, as a non-lawyer background, what we have been observing is there's no right or wrong answer. It's really about your resource and your priority, right? So if you truly believe is potential globally, and also if you really resource abundant, then do whatever you want to do, right? But in most cases, either those two are not true. One of them is not true. Either you're resource constrained or you have a specific market you focus on. And that's the time when you need to make your own decision. What you want to do with the resource constraint? So that's typically how I see.
Sure. And then that makes a lot of sense. And then back to the segments you invest in question. Do you invest in energy infrastructure, AI, cybersecurity, AI, edge compute, et cetera, those industries?
I would say out of the GC Ventures pocket, I think I would say I wouldn't want to. Okay, so you probably see a few industry digital or digital platform is definitely one of the things we keep a very close track on. But in order for us to actually cut a check, I think the key thing is where we can find or identify that strategic synergy for us, right? As long there's a strategic synergy story, I think we are more than happy to take a look. I know this is probably feel very cliche, but that's really the case. So for example, if we're talking about cybersecurity purely for energy infrastructure, that's probably a better fit for our sister fund that's on the electron side, that's focused on infrastructure, not really good fit for us. But if we are talking about edge AI that can be used in a refinery setup, can help us to improve cybersecurity or help us to improve our operation efficiency, yes, we are more than happy to take a look.
Sure. And then the follow-up question to that one is, are there partnership interests in this area? Meaning, all of the other, branches of your organization, I guess they'd be referring to.
Yeah, I think yeah, as I mentioned, I think probably already mentioned this earlier, earlier today, is that for our business unit who are looking at P&L quarter by quarter, and I think for them they are definitely very incentivized to try out and use something that really can generate value for them. However, there's a little bit nuance over here, is that because most of our operation is in Southeast Asia, bring emerging technology from here, and suddenly we're telling them about operation in Southeast Asia is not that easy. So the preferred model, for example, I'm probably specifically talking about, let's say, edge AI or whatever operation. I think it will be much more credible if this company have the technology already tested out with someone here in the US market. And then the same application can easily transferable to what we are doing over there in Thailand. I think that will borrow a lot of credibility regarding the technology adoption and also the value being captured by that. I think those are the scenarios where we do see. Again, I don't want to be too generic, but yes, we are interested in that. However, it's really case by case. Specific about that is it's better to have some other validation point, and then we can be a fast follower in Southeast Asia.
Sure. That makes a lot of sense. And then one other question. Well, it looks like we have at least two more questions, if not more. But a follow-up on the IP question that was raised. What are the red flags and green flags that might arise for you in the due diligence of potential investments IP portfolio?
Sure. I think for different investors, they do due diligence side differently regarding their own criteria about IP. And what I'll say is I'll probably break down into a few different things, right? So so the most fundamental thing is that does the company has a proper way to build a moat around its hardcore technology or IP. For us, that's most important, whether it's through trade secret or through patent or through what. So I think for us, that's basically is there entry barrier. So they build our IP portfolio to create that barrier of entry from other people. That's the first thing. And second thing is, this is probably more along the commercial rights of the IP. So for example, are you licensing from a university or from someone, right? Who has the ownership, who has the licensing right? Is there any exclusivity or for certain things? Is there carve out of certain things? So for us, right? So we prefer to look at a company that has a hardcore technology, well protected, and also we want to reserve the right that in the future that my business unit can potentially work with them in Southeast Asia, right? So that's our intention. So this is where for us, if we see that some company already have let's say IP exclusive licensing with someone else in Southeast Asia, which is not me, not GC, then we're probably gonna pass because that exclude us from future collaboration with them in that region. So again, so that's probably, I would say regarding the IP, and also I have to admit that depends on who you talk to, that a company, again, deep tech may mean very different things. If you ask pharmaceutical peers, IP may mean one different things. If you ask polymer people, IP is very different thing. If you ask process people, if you ask equipment people, if you ask, let's say, software people, the hardcore IP may mean so many different things. And for different sector, they have own industry specific way of what is really value. So that may differ a little bit. At least for us, the process itself is a lot of time, the recipes, the formulation is a core IP where we don't want, exposure or disclosed unintentionally, intentionally to other ways. So I think these are the different things we do evaluate. But for other sector or other industry, they may see that very differently. So I definitely have come across investors who basically says things like, I think that comment is probably more along NDA rather than IP, but basically NDA only goes as far as the people who signs the NDA and respect that, right? So I think it's the same thing applies to IP. Basically, you can have a lot of patents around yourself, but still it doesn't mean anything. Or you have no patent, but you have a hardcore trade secret that buried somewhere and well protected, which is owned by the company, and then people value that. So I definitely have seen things on both sides.
Sure. So Pushkaj wanted to know your thoughts on point source carbon capture startups, given the shift towards more electrification.
Great question. So first, for full disclosure, I'm biased in this case because we do have portfolio companies in the point source carbon capture space. So with that in mind, we're definitely a pro point source carbon capture, right? And then regarding electrification, we also have portfolio companies along that supply chain, right? So either from so this is where I try to tease out the question a little bit. Basically, please correct me if I'm wrong. I think that the key question is basically, do we see a future of we basically operate on petroleum-based energy source and then do the carbon capture versus solar, renewable, or wind-focused route of generating energy? I think that's probably the more like implied question. So how do we see the future goes? It's kind of one way or the other. I think if that's the question, my
You
answer
said
to that,
yes.
okay. I think my answer to that is we are not seeing that the future will be one color. It will be a range of color where there will be a play for electrification or like renewable, there will play for more traditional energy source because the world is big and different part of the world have their unique economic situations and energy need that can only be accessible from that region. So this is where I think a good example that I always try to refer to is there's an energy conglomerate out of France called Total Energy. Maybe 5 or 6 years ago, they did a major rebranding of their logo. I think in the past their logo has like one color, and then I think after the rebranding, they changed that color into a rainbow of spectrum of colors. That's actually a good reflection of that. I think it's not just about us. I think it also applies to other peers. We see that the future will be a mix. And whether we're talking about China, Thailand, US, or Israel or Canada, I think every country will be diversifying their energy source. But I don't think any one of them will be stick with only one energy source.
That makes a lot of sense. Yeah, Hero, got it. Thank you so much. All
Thank you for the
right.
question.
Another question from Leland. Any commentary on the various battery tech out there? ESS, clearly you support. Other flow batteries, vanadium, sorry if I mispronounced, molten metal, and traditional lithium ion battery, BESS.
Great question. I think there's again, we are a support. We are a portfolio company. ESS is a company in the background of my in my background. So we participate in their Series C, C1, C2 round around the year 2020, and the company went public in 21, and we're still a shareholder of the company. So, but we have no inside information, and so again, sorry about this whole disclosure about that. And then regarding the technology, so the way how we see that is we do think that long duration energy storage is a critical need for the world to go after sustainability, right? So I think that's something we see. And then one of the big challenge we see is the long duration energy storage. And then within that ecosystem, ESS, who we backed, as well as many other names and logos, the technology groups that you mentioned, as you mentioned, are the many different technical approaches that are doing that. But even with that, I think as of today, flow battery as a group or technical approach is still emerging compared with some of the other approaches like battery, like lithium ion battery or some other battery out there. So what I can say is this is in public domain. ESS is not the only emerging technology startup that went public out there. And there are a few others following other different technical approaches, whether solid state or some other approach. I think across the board, if you look at all their financial statement, at least in the last 1 or 2 years, most of them, right? Not necessarily all, but most of them miss their revenue growth target. I think that's a fact. So I think as an investor, we definitely want to think about why is that, why certain things happen in a certain way. And our conclusion is that again, I think this is where I think we're definitely up for debate. Different fund, different people have different opinions. I think for us, our understanding of the broader energy storage system or battery-based energy storage system, we're kind of now in a stage where there are two camps, where the more traditional technology like lithium-ion battery base, their cost curve is mainly driven by economy of scale. Everyone wants to build their giga factory, this and that, and try to drive down the cost curve. And then on the other hand, there are a lot of emerging battery technologies, including flow batteries, try to catch up with that. So traditional technologies start much lower, and then over the last decade, they were very successful in terms of bringing down their costs significantly. But however, for emerging technology groups, whether it's ESS or many of the others, their cost curve hasn't been bent down as much as we hoped. So what we see from the market is that, again, depends on what metric you're looking at. From some metrics, what we see is the gap is getting wider and wider rather than narrower. So I think this is kind of where it's really unique to different startups who operate in the space. Do they have a valid strategy and a technology and engineering practice that can actually bend down their cost curve so that they can at least catch up with the lithium ion curve and then outpace them with some future milestones. Again, I think this is probably a much longer answer to the same question because it's very complicated. We don't have the crystal ball. I think for as a venture investor, we understand that everything we back, there's a risk. So a way to look at that is really through portfolio management and diversification. So again, if you're seeing this from a startup, seeing this from a investor perspective, the best way to answer that question is basically build a portfolio company in that supply chain so that you are reasonably diversified. You may win some from one company and lose some from the other, but overall your portfolio approach is okay. If you're looking at this problem from a startup perspective, it's probably better to try to, because you already have one specific technology, right? It's probably better to diversify your development roadmap and application focus so that if one market went down, you still have something else in, as a plan B. So that's probably my way of looking at the problem.
Sure. All right. This might be the last or second to last question because it looks like we got 9 minutes. But Victor asked, for current large power needs and the electrification of transportation, the greatest bottleneck we see is a mass shortage of electrical grade stainless steel. Is your fund seeing the same? If so, what target investments in this area are you interested in?
That's a very, very specific question about a very specific sector. I have the so I think I can comment in a way that on the high level, yes, at least in the US market, we do see that grid is a bottleneck, right? And then when I talk to my peer investors, I think a common, I wouldn't say common, I think each investor is different. I think a lot of people have been talking about, investing in things that can improve. Again, I think in the current market situation, build new transmission line, it actually takes a lot of time. I'm trying to quote a number I heard 2 years ago from an event I went to in Boston area. In Massachusetts, again, please correct me if I'm wrong. I hope I'm wrong. 2 years ago, I was in an event related to that. And there's one, I forgot who, there's this comment about if you try to build a new transmission line in Massachusetts 2 years ago, the permitting itself takes about 10 years. So again, clearly that's not something that fit with a venture type of growth or adoption curves. So this is why from wearing a venture hat, a lot of the peers I'm hearing is there's definitely grid is a bottleneck and people want to invest in that. But typically people prefer to use a little bit softer approach. Do you have something like software AI that you don't have to build new infrastructure, but actually improve things? Incremental, but if we have accumulate 5% incremental change over 5 years, that's already 20, 30% or 50%, depends on how you compound that, right? So that's a way how we're seeing that by compounding incremental changes to enable that. And then there's other camps of people of try to totally avoid the grid. So basically try to build things, connect the power source directly with the user and try to avoid this situation of go online, offline kind of thing. And then going back to the question about the steel again, so that's probably not something that I can comment on. I just have no knowledge about that.
That makes sense. So I think we have time for one more question, but there's one. And I think this one will be probably the last or second to last. Any recommendations for an NSF, National Science Foundation awarded emerging 10-year startup energy tech to break through with a VC like GC?
Sorry, Andrew, can you repeat the question again?
Yeah. The question I'm going to reword it a little bit, but for this company was awarded with a National Science Foundation grant.
Okay, congratulations.
And they've been doing business for about 10 years now in the energy tech space. They want to know what they need to do to break in with a VC like GC Ventures.
Oh, that's a good question. I think you're already doing it by participating in events like this, which is a good start. And if you're a startup already in the space for 10 years, I think you should already have a good potential investor network who are interested in things like this. If you do not have, there are a few resources that I can mention very briefly. I think the first is every NREL, National Renewable Energy Lab is based in Denver, right? And then they have a lot of great industrial connections, network, and events they are having over the years. I think it's IGF, Industrial Growth Forum, is every year like late March, early April timeframe. So that's a good event, and pretty much for anyone in the North American market who are interested in energy specifically, they go to event like that, right? So that's definitely a good resource to tap into. And if you're interested in things like corporate, I think there's an organization called Global Corporate Venturing, so which is the de facto CVC industry association. So they are industry agnostic, but under that they have a dedicated group called Energy Council, basically advise GCV about energy activities and things like that. I happen to be the chair of that council, so that I help connect with people, peers, try to do events to build a stronger energy CVC ecosystem. So I think if you're specifically interested in CVCs, that's also a good resource you can keep track of to see whether there's new information, new event they're doing, where you can get some information. But nowadays, I think AI is a great tool. If you just type which are the energy AI or CVC I should talk to, I think Gemini, GPT, or whoever the name is, they will give you probably more than what you need.
Sure. Absolutely. That's perfect. And so one question I had on my end, oh, that's good. Gerald shared the Energy Council at GCV. Do you guys want to leave? I don't know if you had it in the presentation, but a way to contact you guys, or if it's best just to connect over LinkedIn if they want to connect with the team or follow the page. What's the best way to keep up with GC
Sure,
Ventures?
yeah. More than happy to type my email, and I believe Lisa and Jared can do the same. We can type our emails over there, and it's probably better because given that we have a lot of people on this call, it's probably better to send to all three of them, all three of us, so that we can triage who is best to take what conversation to next step. So that maybe we'll do the same. We'll do that. Okay, let me actually just do it now since I'm here already. So
Sure.
this is my email, and maybe Lisa and Gerald can do the same over here. And feel free to send email to all three of us, and we'll triage and decide who take what call.
Perfect. That's awesome. And I think we have 3 minutes. Oh, okay. George raised his hand. George, you want to put it? Oh, no. Okay. So for some reason, let me see if I can. Here, I'll put it in the chat. I'm going to put, apparently Lisa can't access it. To everyone. And there's Lisa's email.
Yep, that's Lisa's.
Oh, that's so funny. Okay. Oh, and also, let me put yours as well, because apparently I set the settings wrong. Sorry about that, everyone. Okay, and then George, if you have a question, if you want to put it in the chat, I think we have 2 more minutes before our scheduled end time. So feel free to try to ask in that time frame. Otherwise, the emails are in the chat. And let's see. And I think, yeah, Gerald's is there. Oh, Sumit wanted to ask you, I guess this is the last question, about the quantum space. What you guys are you guys looking at that space at all?
Okay, I try to understand this question correctly. If we are talking about quantum computing, I do not think that's a space that we operate in.
Sure.
And however, if we're talking about quantum computing with a specific application for new polymer or plastic design, or a way to improve energy efficiency. So because if we're talking about quantum computing infrastructure, no, that's not a space. However, if we're talking about something more like AI for us, right? Like quantum plus energy, quantum plus chemical. Yes, we'll be interested in have some conversation. But also I also want to admit that we're probably not the expert in that. Even if that's really to be a good fit, we'll probably likely a very teeny tiny check with someone who actually knows the space well as a lead investor. So we probably will be looking at something more like that.
I think that is all the time we have. It's on the dot 2 p.m. Eastern. Tony, thank you so much for doing this. This was really fantastic.
No problem. Thank you very much
re-
for the challenging questions.
I really enjoyed it. Yeah, we should definitely do this again sometimes. And thank you so much to the audience who joined. Feel free to reach out to the GC team over email. And also, I think we will send out a follow-up email with the recording and some other materials. If you guys want to send me materials to distribute to everyone, we'll send that out as well, so that everyone who did or didn't join could get in on it and can see it, and we could work from there. But thank you so much for the time.
All right. Thank you. Bye, everyone.
Absolutely. Bye bye, everyone.